Your pitch deck probably sucks, but you don't know why. When I first started doing big real estate deals, my decks suck too, so don't feel bad. Because when you're pitching your investment to an investor, you need a really good deck that takes a long time to put together and is well researched. A deck can be too long and have too much detail that people won't read it, or it can be too short and you come off like an amateur. The key to creating a good deck is answering and addressing all of the investors' objections that could possibly come from your deal. A good deal with a bad deck can still get funded, and a bad deal with a really good deck will not get funded. So much work has to go into the proper deck. Most people are lazy and don't take the time and effort to put in that work. I'm a real estate developer and I've done over $500 million in projects. I've raised capital from institutional investors and private equity funds that ask a million questions and do tons of due diligence and have checklists, 100 questions long that you have to fill out before you get your project funded. So prepare to do the hard work to having a good deck because it is the key to getting your project funded. First and foremost, I've talked a lot about this in my other videos, which I'll link down below, but the underlying deal has to be amazing. And in my experience, to get a project funded, it's no problem if it's actually an amazing deal with lots of margin. And so that seems self-explanatory, but I've watched so many investors, big pension funds, huge developers with tons of track record, and I've been guilty of this myself early on, where you get started on a project, development takes so long to do, or even if you are just investing in a real estate project, that you get invested in it. And as you go along and do your due diligence and circumstances change or the market shifts, you have more time and money invested in the development. And maybe the returns start looking a little more marginal than when you had started, but you're so married to it and invested emotionally that you end up getting yourself involved in something that's too marginal. And so I've just learned fundamentally that you have to have a very good deal underlying to get it financed in any market. And in the end, even if you can get something financed that's marginal, it just is not a good idea because there are so many things that can change that are unforeseen that you need to have an incredible deal. And I get into that in other videos, what makes an incredible deal. But that is the first and foremost thing when you're putting together investment materials and pitching to your investors, because they're going to be able to tell if there's some uncredible aspect of your deck that is not presented honestly and per actual market data. So the underlying deal is obviously the most important thing. In terms of what you actually need in your deck, I'll get into these steps below. So the first thing is the financial returns, which seem very obvious, but depending on where you're at in your real estate journey, you may or may not know how to use Excel to model financial returns. When I first got started, I had not taken any formal training in Excel, and I understood basics of Excel, but the modeling that's required to do an actual commercial real estate development, which gets into the cost of the project, how long you're going to hold it, what is the cost of your financing, how much interest are you paying over time, when is that project cash flowing and stabilized, when are you disposing of the project, how many different variables and room can you enter in on the schedule to make it still work, depending on if it takes you 24 months to build or 36 months to build. There's a lot that goes into a financial model. I personally didn't know anything about that. And so I just went on Upwork and I hired someone that used to work at Goldman Sachs for $100 an hour and got him to build my models for me. It is a skill set that does require a lot of experience and a lot of training, but with modern entrepreneurship and the tools available now, even with AI and online, there's a lot of resources for people. If you can't afford to have your own analyst that is in-house, that's an employee that can do your own modeling. And I used third-party modelers for a long time that were credible. So like I mentioned, the first modeler I hired was at Goldman Sachs, which is probably the top tier investment banking firm where you can, where you basically live in Excel for years when you work there. So he really taught me the fundamentals of like basics in terms of, when I'm building something, how time can drag down the returns, how much money, like an equity multiple is what it's called, in terms of how much money someone's going to make on the capital they invest. Are they going to 2x their investment, 3x their investment, sort of thing? And how long does that take? So financial projections are really important, that they're accurate and realistic, meaning they can be backed up by comparables. So if you're saying, okay, I'm going to sell this project for $50 million or X amount, you have to be able to point to the market and show what other assets that are similar, whether it be industrial or apartments, that have sold for that X amount. And so the financial modeling is really, really important. And there are many courses you can take on financial modeling, or making sure you have a capable team that knows how to model. But that's the biggest fundamental thing that should be included in the deck, at least the highlights of what the financial returns are going to be for the investment. Second is the deal structure, meaning how is this person going to get paid? How is your investor going to get paid? Now, when I go out with a deck, there's always a proposed structure. So I raise capital from institutional investors that are expecting a certain, like it's called a waterfall, or a certain deal structure that's pretty standard in institutional investment, meaning as the deal hits certain hurdles, they'll get paid a certain amount of the profit. Each model will, when you do your model, that will show what your proposed deal structure is. You need to be saying, it depends on who your audience is. Are you raising capital from, high net worth individuals? Is this like a country club pass the hat round? Is this, are you pitching to private equity funds? It really depends on who your audience is and how sophisticated the deal structure gets. But generally, you need to be able to say, I, as the sponsor, and you, as the investor, are going to get paid a certain amount over the life of the deal, whether you sell it or cash flow it. So they always want to know how much money, needs to be invested, how long is the deal going to take, and how much money am I going to make on that money. Those are the fundamental deal structure returns that need to be included in the deck. Now, in the past, I've put deal structures in my deck, and when I pitch it, an investor will come back to me and give me a term sheet that will not match what I said I wanted. Maybe they have a little bit more aggressive terms. But when you put your deck out there, you're basically saying, hey, like, this is what I think is a fair deal. You don't want to be too in your own favor, because someone will look at that and go, okay, this is an amateur, they don't know what they're doing and I'm not even interested. You don't want to give away too much of the farm, in your deck, because someone will look at that and go, okay, I can really take advantage here. And, I see that a lot in this market where it's so hard to raise capital right now. And the capital markets are so constrained that people, if they are investing money, are being pretty, I'd hate to say predatory, but it's almost, they're so aggressive on what they're requiring now that you're just better off not doing a deal and waiting for the market to recover than take on some onerous terms that are going to, could harm you in the end, because they're so in favor of the investor. And so when you present in your deck, it needs to be a market, which, just takes a certain amount of research and depends on what kind of asset class you're pitching and what kind of deals you're pitching and who you're pitching to. But you want to present a deal structure that is to market. And then when someone says, okay, yeah, I'm interested in investing, but, I really need to de-risk by, reducing the amount of the investment, or making sure that I get a certain return, or, they'll give you different terms, but at least in your deck, it's a fair middle of the road structure that they can digest with. The third thing you need to include in your deck are, what are the risks? I've had so many mentees pitch me on deals, or people come to me giving me decks to review, and they don't include any of the risks. And when I ask them, what are the risks of this deal? They, kind of get dumbfounded and are like, well, I put a lot of room in the underwriting, but it really just makes them come off as really naive. And I was that person before. I'm fundamentally an enthusiastic, you know, always look at the bright side, because I'm the developer and I'm the sponsor and I love my deals. But I have faced a pandemic. I have faced inflation. I've faced supply chain issues, things I could have never imagined in development that you have to persevere that are risks. And it's so hard when you've put in so much time into a project to really make sure to look at those. But now that I've been on the other side and I've been a decade into this and I've faced so many challenges, the only thing I think about is the risks. It can be sad because it can be a little bit paralyzing when you only think about the risks. It's hard to get projects out of the ground because you need to, also look at the advantages. But every investor wants to know what the risks are. And so I always address those in the deck as best you can. Look at the market curve of where interest rates are. Could they be going up? What if there's some entitlement delay? So the city comes in and delays your project because there's salamanders that are inhabiting your site that are endangered and you have to move them to the zoo. That happened to me. I had to basically take salamanders that were living on a site that were endangered and find them a habitat at the zoo that was comfortable for them. I had to work with the zoo personnel. We made them a whole nest of a whole place where they could procreate. And then I had to move them back to the site, and it was like save the salamanders. And it was actually really cool in the end, but it definitely added 3 months to a project. And if your project costs you, $20 million and you have $10 million on the bank out, you can do the math, but that costs several tens of thousands of dollars a month just in holding costs. So that's an example of how, time can get extended for various things. There could be, extreme weather delays. There can be acts of God that are not going to be covered, by your general contractor in a contract. And you're ultimately the owner and you're going to be the one that has to deal with that. There's a million things that are risks. And so you have to at least address the big ones that any investor would want seen in the deck. And it shows that you're really trying to protect their money. And you can show a rough draft of the deck. What I used to do is I used to show, and I still do this, I show a rough draft to mentors that I have in the business or people that I trust that know how to do the projects that are similar to mine, or my board. And I get their feedback and think, tell me what you think the risks are with this deal. And I really get them to look at from their viewpoint what I'm not thinking of. And I make sure to address that in the deck because it really shows that you are doing your own due diligence and making sure that what you're presenting is legitimate. The fourth thing that you need to show is who your team is and why they can get this done. So people have a very short attention span. They don't need a life history of everyone on your team. If you're building an industrial asset, then put some bullet points about each team member that are relevant to that asset. My chief development officer has developed over 4 million square feet of industrial assets. Put that there. Has over 25 years experience in the real estate industry and ground up development. Put bullet points, put who your team is, the key components of your team. If it's small, then you can leverage even consultants that are working on the team and just make that clear that they're not an employee. But you want to show who are the people that are actually going to be working on this deal so that when the investor gets to know you, they're knowing who they're entrusting with this project and what their experience is. Not saying that everybody, that I didn't get projects funded when I was a total amateur, but I for sure partnered, or I made sure to have people that were on my team, on my board, a part of the project that had a lot of experience. Because if someone's going to give you money, they want to know who they're investing with. A lot of people, depending on who the investor is, not so much in institutions, but a lot of family offices, personal investing relationships, as I said, like country club, pass the hat to friends and family type raises, they're really just entrusting you. And that's a huge responsibility because they're just looking at, who am I doing business with? Is this person going to do the right thing? Is this person going to be ethical? If things hit the fan and the market gets tough, are they going to be able to persevere? Are they going to give up? So they're investing in your character and your team's character. So it's really important to show in the deck who they're investing with, because most people would say that's the top criteria for them when they're doing a deal. You can do a great deal with bad people and it won't turn out well, or you can do a marginal deal with really great people that'll get it over the line. And a lot of people would rather do the marginal deal with a great person than have, a slightly better return and be working with a bunch of assholes. So it just depends on, who who you are. You want to show that, you want to be transparent and put your team in the deck. The fifth thing you need is thorough underwriting on the location, the asset class, and the market in general. So I got into that a little bit with point one in the financial underwriting. This is where you put a lot of the data, but you should summarize key components of the market. So if you're doing an apartment building and it's in a market that you need to understand how much supply is coming online in that market. What is the pipeline of projects in the pipeline? How many units are under construction? How many units are absorbed every single quarter? All of this information is available on like national brokers firms websites like CBRE and Cushman. They have a great wealth of information. You have CoStar. Your analyst or whoever's doing your underwriting should have access and understand how to access this data. You should be doing your own research, obviously, but the key components of it need to be included in the deck. Investors always want to see market trends, demographic trends. How many people are moving to the city? Why are they moving there? How is this product going to be absorbed? It takes a lot of research to make sure you're doing the right project. Now, you can over research and over analyze a project to death, but depending on its size, it's really important to include at least the fundamental basics in your deck in terms of market research. I've looked at decks where someone says they're going to sell condo units for $1,000 a foot or $1,200 a foot. I can go on Google in 1 second, go to Zillow, see how much is a condo selling in this neighborhood, and see that the comparables are $700 a foot. And I just look at it and I go, well, this looks like a pretty nice product. You tell me what you're building. Why are you going to get 30% more, as an example? And you have to have the research backed up. You have to say, 90% of the units in this market are in this price range. I'm at a middle market price point. You have to have all of the data backing up your projections. Otherwise, any investor that's at all sophisticated or at all looking at giving you serious capital is, if they have their own money, usually that means that are smart because they have enough money to invest. And usually that means that even if they're a doctor or something that's in a field that's completely different than real estate, they're smart enough. They're giving over their hard-earned money to you, or they've been endowed with investing capital, like a chief investment officer of a fund or a pension fund or something like that. And these people are smart. They want to see the data behind your underwriting. And so many times I just see financial modeling and projections that are just not accurate. I mean, people just kind of put in the numbers that they want because to make the deal look better. And it's not really backed up by anything. And it's something that, it happens even in the large. I mean, if you've seen the movie The Big Short, I mean, I've seen hundreds of millions of dollars in deals where people push the underwriting, and it amazes me how much people are willing to flex. And I've made this mistake early on in my career as well. It's like, you can't just will something into, like, you have to have the actual research and data behind it. Otherwise it's better to not, the deals that you don't do end up making you more money than getting into a bad deal, as I always will say. So the last thing I would say is that you need to make sure that your deck is professionally designed and laid out. And you don't have to be a graphic designer. And this is where I see a lot of people that are hedge fund managers and brilliant and so smart that they literally have incredible information, but they put it on a Word document that's all black and white, and it's so boring that people don't read it. And so these days, as I said, Upwork has been an incredible resource for me. I still will use it. I save a lot of money in it by not having a ton of employees and being able to go to Upwork for things, or I have consultants now that I've developed over the years where, for a couple $100 of someone's time, they will graphically design something that fits what your brand and what you're trying to sell is. Mine is a very modern aesthetic. I've come from California. I have my own style and my developments and what I'm trying to create. But even if want to convert motels into affordable housing, you have some sort of brand and style that you're representing that you should try to convey in your marketing materials. And I think that me having a female perspective on this has been given me an upper hand, because I just see so many decks that are like just so boring. And it really, it's like anything else. It's like people have an attention span that is so minimal these days. And if you're not looking at something that's a video or, consuming social media, they want to flip through a deck, they want to get the points, and they want it to be interesting. So I personally make my branding very bold, very clean, very fresh. It doesn't look like what every single institutional investor deck looks like. It's not super boring. It doesn't look like a legal white paper, but that's part of my brand. If you are selling to pension funds and you have a super boring product that is being invested by boring people, then yeah, make your deck representative of that. But typos, the easy low hanging fruit, you wouldn't believe how many decks I reviewed that someone's asking for $50 million and they don't have proper punctuation. I mean, that's like hands down, you have to proofread. It has to be clean, organized, not too long, not too short, but just professionally put together. And that can be done these days with AI. There's no excuse. It can be very done inexpensively just to make your deck look slightly better than just throwing something up on a PowerPoint template. In conclusion, I hope this helps you make a better investment deck for whatever you're trying to pitch. As I mentioned, there are plenty of resources out there between AI softwares and websites like Upwork where people can help you. I would look at any and all examples of pitch decks that are relative to what you're selling, and looking at that to get more templates and ideas. But I do wish you luck in making a deck, but don't forget the deal and the other underlying investment must be amazing. So if you want to watch one of my videos on what does make that deal so amazing and investable, watch this next one.